But as you know, and as I did say, it's not just if you finish, it's if you finish, and people understand what you're doing. All right. So that's officially once again, good morning, everybody. Glad to have you all on. Sorry for the delay. My babysitter had babysitter, nanny, however you want to call it. She had a little unsuspected issue with transport. I don't even know if she's there yet. So my wife is home with the 5-month-old and the 11-year-old. So he is supposed to be helping, although he has SCA in a few days, right? Not this Thursday, coming in next Thursday, right? Anyhow, right. So let me come out of here. Go back into module 3. Although I think I have all this stuff I want to have open. Right? Okay, so folks, let's just take a quick recap of the stuff we did last week, Saturday. Right, there we go. Okay, so where did it go? Right, cool. So we talked about budgeting, and we said budgeting has to do with making a plan for the use of your resources, right? So we defined it there. We talked about some reasons, right? Feasibility, a guide to action, very important. Again, I've been listening to some other guy who I mentioned to you guys, Tom Billieu. He does some online coaching and has some mastermind groups and stuff. And one of the things he has, one of the modules, like have a hyper-specific goal, right? And of course, you have different levels of goals, but they all have to kind of support each other, right? So to me, that's a guide to action. So you're budgeting your resources, your time, your energy, your money, right? And any other resources, right? Now, performance evaluation. He also talks about that. If you don't have something to aim at, you'll never hit it. And a lot of people don't set goals because they're afraid they won't hit it. And when they do hit it, they feel badly. So you have to be able to endure that kind of pain or discomfort of failing. And failing isn't the end. It isn't an end state, right? It isn't a state of permanence, right? You fail, you learn your lessons, and you begin again more intelligently, all right? So yes, performance evaluation is part of what budgeting facilitates. And all right, so I think that was the one I was kind of alluding to, right? The coordination and communication across departments, right? Now you have your top-down budgeting, which you said is also called imposed or autocratic, where the bosses just say, hey, this is what we're doing, this is the plan. I want any back talk, any suggestions, just do what I do, right? And sometimes as necessary, sometimes it works very well. Other times it doesn't, right? The bottom-up approach is where you say, like, hey, you all workers, you're all on the front lines here. I want to do this. This is my plan. How realistic is this? Do you all think this is a good plan? What could be improved, right? Because people who work in the front line, in the trenches, that kind of stuff, they have the knowledge of what actually happens on the ground, right? In the actual workings of the business, right? Sometimes when people are a bit too far removed for too long, then we get stuff like CXC syllabuses, right? Anyhow, right? Now we did the production budget, and last week I happened to think of this slightly different way to explain how to do the budget, because some of you all said you didn't understand the structure of the budget from the previous week, you replay, right? So I wasn't going to leave that standing. I didn't want to, and I was able to facilitate, right? So production is sales minus opening stock, right? Or sales plus closing stock. When you combine them, it's sales plus closing stock minus opening stock, right? So we did the production budget. Sorry. Right. Did a couple of them, and we saw what happens. I don't know what's going on. Right. What happens sometimes is you have to consider periods beyond the scope of the actual statement itself, and you have to work with your percentages. Right. We did a classwork question. All right. And then we had the purchases budget, the materials purchases budget. And we said that kind of it was fed from the production budget, because the materials that you need for production would be informed by how many units you need to produce and how many units of materials are required per unit of finished product, right? Now, we did a couple of questions there. I think I gave you all one for, I want to say homework, but I mean, I give you all stuff to do, and whether you do it or not is really up to you, all right? But you're, of course, free to send me pics of your work and these things, ask me questions, right? A little less able to respond as I used to before, but I'm trying, all right? So again, apologies to anybody who sent me stuff to do and I didn't get around to do that. I do apologize, right? That's not the norm. Anyhow, today, ladies and gents, we want to talk about the schedule of cash collections. Sorry, one sec. Yeah, okay, cool, thank you. Right, yeah, so we want to talk about the schedule of cash collections because we want to build up to something called the cash budget, right? And the cash budget is actually part of the overall thing called the master budget. And the cash budget is fed by the materials purchases budget, as well as the, as I say, schedule of cash collection. So again, we get into business to make a profit, and we do so by selling goods or providing services. And with those activities, you can have cash sales or you can have credit sales, right? So credit sales is a phenomenon of business. And when you sell on credit, you then have to collect. And the collections take place sometimes, well, a lot of times at different points in time. So you can have a collection policy. You might tell the people, hey, well, look, your customers, look, I'll give you 2 weeks, you have to pay me. Or you might say 4 weeks, or you might say, if you take longer than 30 days to pay me, we tack it on interest, right? So you have different things depending on the entity involved, depending on the agreement between them and the customer, right? So what we're going to take a look at is how to put together, how to read through a question, interpret it, and put together the schedule of cash collections, which will feed into the cash budget, which we're going to be doing next week. Yes. Right. The only thing about next week is I think my stepson has a walkathon at 7 in the morning. Now, I did it a couple of years ago, and I was able to make it back in time for class, but I'll see if I can negotiate with my wife. But again, I can't see her carrying the 2.5-year-old and the 5-month-old without me, but we'll see how that goes. All right, let me just answer this question here real quick. Right, this looks like a cash budget. Yeah, this is one particular format. So remember, there's no one right format or single particular layout that exists. There are different ones, but that's one of the ones that is acceptable. You can shift around some things, but we'll get back to that. So let's dive into today's work. Let me just see who's not here. Right, Haley said she couldn't make it. Julia said she did it. Okay, no worries. Well, if they reach, if not, well, we here. And you replay recording, right? So Sugarland Company sells a single product and anticipates opening a new facility in Charlotte on May 1st of the current year. Expected sales during the first 3 months of activity are May 60,000, June 80, and July 85. Okay, so that's dollars. That's not units, so dollars, right? Now, 30% of all sales are for cash. The remaining 70% are on account, which means they are on credit. Okay. Sorry. I had a file open. Yeah, I do. Right. And credit sales have the following collection pattern. So this 70%, right? Of that 70%, you're collecting 60%. So not 60 out of 70, that will leave 10%. 60% of 70%, which means 42, right? So in the same month, so in May, you're going to sell 30% for cash, 70% on credit. And out of that 70%, 60% of it you're going to collect in the same month. In the next month, you're going to collect 35% of 70%. And then the remaining 5%, you're just writing off as uncollectible because of experience or prudence or whatever the case, right? Now, they want a schedule of cash collections for May through July and to compute the expected balance in accounts receivable as of July 31st. Okay. So what we do, now I'm going to show you all two particular formats here, right? Two layouts. I'm going to show you all the slightly more compact version that I am accustomed to. And then I'm going to give you a slightly, well, not slight, no. It's a longer layout / format that you can use if you like a higher level of detail and to be able to, I guess, see more things that might help you think through it a bit more easily. All right. Now, again, if you have a different one from school to which you're accustomed and you like using, by all means, there's no one right format, right? And teachers just teach you all what they themselves were taught, and sometimes they don't think outside the box how to improve certain things. Sometimes they do. All right. Anyhow. Okay, so the first thing we're going to put here that I put is total sales. Now in May we have 60,000, in June we have 80,000, and in July we have 85,000. All right. Now I'm just going to put a little line here. Oh. What I'm going to do here to kind of help, like visually, is I'm going to give each month a color. So I'm going to give May, right? I'm going to give May a kind of goldish color. I'm going to give June a blue, and I'm going to give July a green. And what I'm going to do is I'm going to kind of, the money that comes from those months, we're going to, whenever we receive them, we're going to put that color to show that, hey, we got this particular amount came from there, that particular month. Okay, right. Okay, so now this is total sales, and we're going to give a breakdown of how much cash was actually collected in any given month. So just to recap it, 30% of all sales are for cash. So in any given month, you're going to collect 30% of the sales. As a matter of fact, let's put that, right? So cash sales, right? 30%. Right, so 30% of that. So that's 18, then we have 24, then we have 85. Right, now this came from me. So we're going to put that one in a yellow. Now you guys don't have to highlight anything. You don't have to put anything in colors. I'm just doing this because I find it helps. It kind of helps me, right? Oh, I hear my son outside there. I come down with my parents to play. Hi, Amanda. This is Unit 2, Module 3 in Unit 2. All right. Now, the next thing is accounts receivable. Current month. All right. Now this here is, so out of the 70% are on credit, right? Out of that 70%, we're collecting 60% in the same month. 60% of 70% of sales. Oh, sorry. I didn't hear the thing. Hey, hi Julia, morning. Sorry, I didn't hear the notification. All right, yeah. This is the first question, the example we're doing a schedule of cash collections. All right, so they give us total sales, and they're telling us that 30% of all sales are for cash. So I have one line for cash sales. The colors are for specific months. So the money coming from May, I'm coloring in yellow. The money from June, I'm coloring in blue. And the money from July, I'm coloring in green. And I'm doing that because the money is going to come in at different points in time. So I like us to be able to kind of trace what comes in when and from when. Right? Okay, so cash sales are 30% of total sales. Now, 70% of sales are on account. So the remaining 42,000 were on credit. Now, out of that 42,000, you're collecting 60% in the current month. So that means you're collecting 60% of 70% of this. So that's 25.2. Right? I'm going to put it on yellow. Now, in June, right, you're going to be collecting, so you collected 30% of this as your cash sales. 70% of this, which is 56,000, is the credit sales. And you're collecting 60% of that, right, now. So when you bring it across, so 60% of 70% of this, right? So 70% of this is 56 as the credit sales, and 60% of that is collected in the same month, right? And sorry, this was supposed to be in blue. And now, in this month, we're collecting, so 70% of 85, right, is the credit sales, and you're collecting 60% of that 70% in the same July. Right. And then, receivable previous month. So you have 35% of 70%. Now, in May, we collected not only for May, but for April. Because remember, if you make sales in any given month, you're collecting piece now and piece in next month. So for May, you're going to collect most of it in May and some in June. For June, you're going to collect most of it in June and some in July. For July, you're going to collect most of it in July and some in August. But that means in any given month, you are collecting revenue from 2 separate months: the current month and the month before. So in May, you're going to be collecting for May and April, but they didn't give us any information for April, right? So they opened the facility on the 1st of May. So clearly they weren't operating before. So they had no sales from before, all right? So there's no receivables from the previous month in May. In June, right, we're collecting 35% of 70% of May. All right, so that's equal to 0.35 by 0.7 by 60. Sorry. Okay, and then in July, we're collecting piece of June sales. What piece? Well, we're collecting piece of the receivable, the ones that were on account or on credit. 70% of 80 is 56, and we're collecting 35% of that in the following month. So that's equal to 0.35 by 0.7 by 80. Right. Now we just this here is total cash collected. Right. So I'm going to recap it real quick. So in any given month, right, 30% of all sales are for cash. So you have one line for your cash sales. Then 70% are on account or on credit. Of that 70%, you're collecting 60% in the same month. You're collecting 35% in the next month, and then the remaining 5% is uncollectible. All right? So May's sales, some are collected in May, right? 30% is for cash, and then you have 70% on credit. 60% of those are collected now, and 35% in the following month, June. Right? Now for June, hold on, sorry, it's the wrong color. Right? For June, right, you're collecting the 30%, which is cash sales now. 70% of that, right, is the credit sales. 60% of which is collected in June, 35% of which is collected in July, and the remaining 5%, well, is written off as uncollectible. And in July, you're collecting 30% of this as cash sales, right? And then the remaining 70% is credit sales, 60% of which is collected in the same month. Okay, so ladies and gents, if you guys are good with that, just kindly give me a quick G in the chat. If you need me to re-explain, it's not a problem, but please give me an R. And if you can let me know specifically what it is you want me to re-explain, that would help me to get it faster. Right? And like I did mention, I have an alternative layout. Do I? Where did I go? Oh, okay, yeah. What is this? I don't know what that is. All right. Oh, okay. So that's almost everybody. Wait, wow. All right. All right. So it's 13 out of 14, 15 people. Not bad. Next two, let me know. All right. Yeah, no, sorry. I thought I had another alternative format. All this shows is it kind of it splits up the sales into cash and credit, and then shows when the credit sales are. Sorry, it's the individual amounts. Okay. Yeah, no, I'm not, okay. I won't worry about that. I won't worry. Okay, so what I want to do, I'm gonna zoom out a little bit. Send this in the chat. And I'm gonna give you guys one to try. All right, so let's send question and solution separately, shall we? Unit 2, not Unit 1. Sorry. All right, cool. So the next question is Wilson. All right, so this is Wilson. Wilson is this is a past paper question. I wonder which year. Hold on, let me pull up the past paper. 2018, go back. Beth is 2018. Wilson is 2016. So this is PCD 2016 question. So yeah, I kind of broke it up into pieces because I think that asks for a cash budget, which required all the bits and pieces, right? All right, so we have October, November, December, January. So we have sales, we have 375, 562.5, 312, 500, and 250. Okay. Now sales are 25%. Sales, 25% of cash is collected in the month of sale. 50% is collected in the first month following the sale, and 23% in the second month following the sale. The remaining 2% is uncollectible. Okay. Sales for August and September were 200,000 and 250,000 respectively. Okay. So all sales are on, sorry, so there, all sales are on credit, right? So what it's saying is that in any given month, the sales from that month is being collected in 3 separate months, right? So for example, October sales is collected in the month of sale, so peace in October, 50% in the first month following the sale, so that's November, and then 23% in the second month following the sale, so that's peace in December, right? And the remaining 2% is uncollectible, okay? So, okay, so what I'll do is I'll help you out here a little bit if you need it, right? So we're gonna start off with putting sales. Now again, that might just be my custom. Some teachers don't do that. That's not a problem for me. If you don't want to put it, it's not a problem, right? Again, there's no one right format to put. All right, and then we have the 375, 562, 500, 312. Right. The January thing will come into play next time, right? We don't need it right now. Okay. So we have 3 in any given month. So just like how I said, from any month, the collections take place in 3 different months. Another way of saying that is in any month, we are actually collecting receipts from 3 different months. So remember, like I said, sales from October will be collected in October, November, and December, right? But in October, we will collect for October, the month before September, and the month before that, right? So the cash you're collecting will actually be from 3. So you have receipts from current month, right? So 25%. Receipts from previous month, which is how much? 50%. And receipts from 2 months prior. Right? Now those labels are not set in stone. If you have a different way of label, that's perfectly fine, right? Okay. Now we are only interested in October, November, December. So you're not actually going to show, oh, and this is actually an extra 0. Right? So these actually don't make it into the body of your working, but they need to be there. Sorry, the calculations will be based on those things. But I'm just showing them here for the sake of illustration, right? Okay. So I'll do October for you in 2 different ways, and then I'll delete it, and then let you try to finish yours, right? So one way to think of it is you could do October sales. When am I collecting October sales? October sales are collected in October, in November, and December. 25%, 50%, 23%, right? So you could do it like that. Alternatively, you could say, hey, in October, I'm collecting 25% of October, 50% of September, and 23% of August, right? So let me show you well, again, each approach, so you could decide how you want to do it, right? 25% by this, right? And then 50% of this, and then 23% of, wait, oh, sorry. Right? You could do it like that. You could say, okay, October, I'm taking my October and I'm working with that alone, right? The money from October, when am I collecting it? These 3 months, cool. So that's one way you could do it, right? The other way you could do it is you could take it month by month, as in what am I collecting in any given month? So in any given month, I'm collecting 25% of the current month sales. I'm also collecting 50% of the previous month sales, and I'm collecting 23% of the month before that's sales, right? So that's the other way you could do it. Okay. So again, like I said, I don't want to kind of spoil it and do too much work and rob you all of the opportunity to try. Okay. All right. So what I'd like you guys to do is to do the schedule of cash collections, right? So again, you don't have to have this top line. I just like to have it because, well, in Excel, that's how I kind of put my work. It's making it a lot easier. But you don't have to have it if you don't want to. You can. Again, there's no one specific or one singular way to do any of these budgets or schedules, right? You have different. Okay, so I'm gonna give you like a 5-10 minutes, right? Or 7 to 10 minutes. Please feel free to send me pics of your work as you go along or ask any questions, right? Right. I understand this topic could be a bit troublesome for. I mean, and every topic is troublesome for somebody, right? So that's why you're here to get help, right? And budgets was one of the most challenging ones for me when I was in Form 6 too. So don't feel out, please. a couple minutes again. So I'm gonna put back October. Right? And what I'll do again, I'll kind of go down diagonal. Should I just go down? I'll go down. I'll go month by month, right? So in October, we're collecting 25% of the current month, right? We're also collecting 50% of the previous month. Cool. We're collecting 23% of the month before that, right? Out of those, 264,750. So 50% of that, sorry, 25% of that, 50% of 375, and 50, and then 23% of 250. 25% of 312, 50% of 562, 500, and then 23% of 375. Oops, sorry. Right. Okay. Just gonna send a couple of pics in the chat. All right. So check out the working. Sorry, check out the solution. Sorry, my head blocking. Right. Should be blocking anymore. Thanks one person who sent their pic. The 31st March public. Tuesday the 8th. Primary schools dismissed at 11:30. Wednesday 9th, all schools close. So basically all the two ending then. Wow. Yeah, real morning, how you doing? Cape, right. Fit this all into one pic. Should I? Well, I did, so I think we're okay. Okay, ladies and gents, if you guys are good with that, just kindly give me a quick G in the chat. Please and thanks. If you need me to re-explain, give me an R. And if you can let me know specifically what you want me to re-explain, that would help me to help you faster. Sorry. And if you don't want to say it here in the chat, then you could always message me privately on WhatsApp. That's not a problem, right? Very happy to help there. Right? Aaron Ronnie 41 boy. 9 out of 15. So 60%, 3/5 of y'all. Next 6 out of them know what's going on. If anything confusing, and it could be confusing, I could understand why it could be confusing. But it'll let me know if I could clarify. I'll try. Right? Okay. All right. So, sorry, go ahead. I saw somebody say something, you know. Wow. Hearing things now. Oh, right. Hold on, let me see. Sorry. Oh, that's okay. That's all right. Yeah, no. Well, you could blame me because I put them in just for the sake of having my stuff in Excel. Right? Really and truly, you wouldn't show these things here when you're doing your solution. I mean, if you put it in, you wouldn't lose marks. You just can't get any extra marks. All right. Okay. Cool. So now, we're still with Wilson. All right. So with this now, what we're going to take a look at is the purchases budget, right? So we're gonna do up a purchases budget real fast, and then we're gonna have a schedule of cash disbursements for purchases, right? So basically, this is like the I don't want to say the opposite to the schedule of cash collections, but technically it is because it's showing cash going out and the timing of the outflows specifically for purchases, right? And the schedule of cash collections was specifically for sales, right? Okay, so I'm gonna help you out here, and I'm gonna do this one kind of quick. All right. So sales, right? So this information is the same as the question before, right? I just kind of sorry, revealed a bit more of it. Okay. So the cost is here. So inventory on hand at the end of each month must be 12.5% of the cost of sales in the following month. So inventory as at 30th September 2016 was 32,812.50. I don't know why they chose to put dollars and cents in. Well, sorry, cents, but anyhow, it didn't make sense to me. Anyhow, right. Okay, so here, the purchases budget is basically the exact same as the production budget, except that instead of using the word production, you use purchases. Right? So you're going to start off with the cost of sales in this particular case, right? You're going to add your closing stock or inventory item, which is 0.5% of next month's cost of sales. Right? And then you're going to minus the opening stock. That's going to give you the purchases, right? So yeah, I'll do October, and I'll let you guys do November and December, right? Just for a little bit of practice. Okay, so cost of sales, they give us 262,500, 393, 750, 218, 750, 175. We know we'll need that, right? You're not going to show it, but you know you're going to need it for your calculation. So I'm just putting it in there, right? Okay, so cost of sales, add closing stock, which is 12.5% of next month's cost of sales. 12.5% of that, 12.5% of this, and 12.5. Oh wait, I said I was doing October, and I'll give you November, December too. Sorry. All right, so you can add those two. This is the cost of goods available sale, right? And the opening stock. Now the opening stock inventory at the end of September is this. Inventory at the end of September's closing stock becomes October's opening stock. Oh, man named Kaya Theodore, boy. Long time no see. Since the YouTube, my brother. All right. Okay. So, ladies and gents, I'd like you to do, basically, you're going to finish off this purchases budget for me, and then I'm going to walk you through how to do a schedule of cash disbursements for purchases. Right? After we do that, we'll do cavalcade. Right? Yeah. I'll start filling in some more stuff shortly, right? All right. So 12.5%. So closing stock for November is 12.5% of December's cost of sales. Add those together to get this particular piece here. The opening stock, the opening stock for November is October's closing stock. Subtract that, and we get that. Okay. For December now, December's closing stock is 12.5% of January's cost of sales. Add that together to get the cost of goods available, and you subtract the opening stock, which is November's closing stock. Sorry, my bad. Right, this here. See why it's good to double check your work? On top of that, it was supposed to be a negative. Right. See, double check your work. It's very important to do so, especially when you have automation like how I have. It can be very tempting to just be lazy and think you're letting it do the work for you, and you are doing the wrong thing. Okay. So this is the the purchases budget for Wilson. What I'm gonna do is I'm gonna send a picture of this in the chat. Give me one sec. Just send this in the chat real quick. Okay, the numbers are a little dark because I have it highlighted on top of highlighter, right? Anyhow, okay, so here now, so we have the purchases figure here. For inventory purchases, 65% is paid in the month in which the goods are purchased, and the remainder is paid in the following month. So that's just 35%, right? Accounts payable at the end of September for inventory purchases is 7. Now, why is that important? Because remember, inventory purchases is paid for in 2 months, the current month and the month following. All right. So again, there's no one right way to present this. So purchases. Hello. Right. So So here we're only going to have two lines, right? Payments for the current month purchases and payments for the previous month's purchases. Okay. Now, really and truly, oh, right. So the accounts payable is 78, that'll just go here. All right. So in October, we pay in 65% of October's now and 35% in November. Right? And then for November, we pay in 65% now and 35% here. For December, 65% here. Now the 35% will be in January that we're not doing. All right. All right. And the 78,000 goes here wholesale. Okay. All right. So I want you to copy this down and finish it off with just those three figures, right? So, we up. Hey, what's going on? Yeah, we up. Long time. It's about, well, first, I had multiple calls last night, boy. Yeah, about 4:30. Then took a nap for about an hour and a half, or hour. Oh, well. Just finish it off for me real quick. We'll do Cavalcade. Right, what we'll do with Cavalcade, we'll go straight to Cavalcade's purchases and cash disbursements, and then we'll backtrack for cash collections. What are we doing? This is CAPE Accounting, Unit 2. We're doing budgets. This is a question from the 2016 paper, I believe. So it's not CSEC Maths today. Yeah, I mean, once you know what to do, it's easy. I agree. And use Caribbean AI for Cape Pass papers. You're supposed to be able to. I haven't used it much, so I can't tell you for sure. All right, guys, so let's go. We need a minute or two again. I'll give it the rest of the minutes to finish off. Use it, okay, well, that's good. You're nonchalant. Generally speaking, no. Okay, cool. So, we're collecting 65% of November in November, 35% of November in December, and then 65% of, sorry, December. All right, and then we just add that, and we're good to go. Yeah, like when they have sense, it's just kind of bog things down. And the sense, so what do you call it? Immaterial. Okay, can I get a G if you guys are good with the this item, the schedule of cash disbursements for purchases? Elliot, talk to me. What's up? Oh, you're good? Okay. Okay, yeah, no problem. Okay, cool, no problem. That's perfectly fine. You do your thing. Bye. Okay. Okay, so 12 out of 14, not bad. It's pretty good. The next two will let me know. Okay, all right. So what we're going to do now is we're going to do another possible question, which is cavalcade, right? I'll have cavalcades, what you call it, schedule of cash collections first. But seeing as we just did a purchases budget and a schedule for cash disbursements, I think I want to do that one first, and then we'll rounds back. Hold on. Okay, so we need sales. So 140, 280. All right, cool. So let me actually kind of help you out here, right? So sales is 140, 280, 225, and then 400. Just for information, right? Okay. So some expenses are expected to vary with sales in each month. So cost of goods sold is 60% of sales, right? So again, you're going to start with the cost of goods sold. You have to add your closing stock. Let's zoom out a little bit. And after last year, opening stock. That's going to give you the purchases. The ending inventory of each month should equal to 1/3 of the amount estimated for the cost of sales in the coming month. Right, so this here is 68% of sales. Sorry. This here is 1/3 of next month's cost of sales. That'll cost will give you the cost of goods. Sorry, my bad. Cost of goods available for sale. Right, the opening stock 29,000. That's what this inventory is. 29,000. Sorry, it's just kind of floating there. I'll give you that one, right? Okay, so if I find 60% of sales here, right, you're probably going to want to find 60% of this too. Sorry, that'll feed here. Next month's cost of sales. Yeah, no, you want to find 60% right through, and 1/3 of next month's cost of sales added to get that, and then your closing stock from 1 month becomes the next month's opening stock. Right, so you're doing the purchases budget for Cavalcade, right, and then we will take into consideration the 60% of merchandise is paid for that. That's the next piece, right? So we're doing the purchases budget first. So I'll give you like a 7 to 10 minutes to sort out. We'll do the purchases. Sorry, we'll correct that. We'll do the disbursement schedule, and then we'll round back to do the collection schedule. Sorry, what year is this part of the question? 2016. Hold on. Sorry, Cavalcade. Sorry. Cavalcade. Wilson. Fillmore. Pamela Codron. Cavalcade is who? I don't even know. 2010. Either 2009 or 2010. All right, I'll give you the rest of the minutes. And then I'll jump in and sort all out. Right, let's go. Okay, so 60% of cost of sales. Sorry, cost of sales is 60% of sales. Right, so that, right. So again, you could just go across all the way if you want, or you could go down, right? Closing stock is 1/3 of next month's cost. Okay, so we definitely need to have all the cost of sales in play so we could deal with that. Right. 1/3. Right. So 1/3 of that, 1/3 of that, 1/3. Right, lovely. We add those up and you subtract going down. Right, and then this one will be this one here. Oh, put a minus. Right. Right. Okay. Give me a quick G if you guys are good with the purchases budget, please and thanks. If you need me to re-explain, give me a R. Sorry. I don't want to say that. Okay. Okay. Okay, cool. Not bad. 9 out of 14. All right. So the next thing we're doing is the, hold on, can I split it here? Copy and paste that here. Okay. So what we're doing now is a schedule for cash disbursement. So it says here 60% of the merchandise will be paid for in the month in which the purchase is made, and the balance paid for in the following month. Right? So 60% of the merchandise is paid for in the month. So 60% of January is paid for in January, and the balance is paid in the following month. So that's 40%. So January is paid for in January and Feb. February paid for 60% in February, 40% in March. March is paid for 60% in March, and well, we're not doing April, right? Now, the previous month for January, I don't think we have anything. But they began operations on Jan 1st. So there's no collection, right? So disbursements for current month purchases, and disbursements prior month's purchases. Okay, so it's 60% and 40%, right? That's 600 total. All right, so take a swing. All right, don't forget you send pics of your work. With the rest of the minutes to finish it off. All right. Okay, so 60% of each one. And well, we started in January, so there's no prior month to find 40% of, right? So 40% of that, sorry, 60%, 60%, and then 40% of the previous month. Right, cool. Cool. All right, give me a quick G if you guys go with that particular question, that schedule of cash disbursements for purchases. Right, if you have any lingering doubts, anything I want to re-explain, give me a R. Please. All right. Right, we're going to backtrack a little bit to the first part of the question, which is a schedule of cash collections. Right, that was the first thing we did. So, you guys, we did an example. You guys did one question. We're going to do the next question on it now. Hold on, just now, wait. Did I send a pic of this? Yeah, I did. Cavalcade, right. Okay, so this is the other part of the initial part of Cavalcade, right? Right, so Cavalcade is expected to begin operations on 1st of January 2009. Projected sales for the first 4 months are as follows: 140, 280, so they double. Wow. And slows down 45, then slows down 75. Right. 20% of the company's sales will be for cash. 20% are for cash. Remaining 80% will be on credit. Right. 75% of the receivables, so 75% of 80%, will be collected in the month of the sale and 23% the following month. The remaining receivables, remaining 2% of 80%, will be deemed uncollectible. All right, so they wanted to do the schedule of cash collections. So again, you could start off with the sales, but you don't have to. That's just my custom. Hassles. I have cash sales, current months, previous months receivables, total cash received, total cash collected. Wait, hold on. What happened there? All right, so you have a little assistance there. Ready? Come out a little bit again, right? A bit more. That's still okay. If it's too small, let me know. Right. Okay. 1 second. Right. So cash sales is 20% of the current month sales. So you could do that. Right. Right. Now, in the current month, we collect 75% of the receivables, which is 80% of sales. 0.75 by 8 by 84. Right? 75% of 80% of 280. 5% of 80% of that. Right? Now in January, we just started, so we have no previous month sales. Right? Now we have 23% of 80% of the previous month sales. The previous month sales. Right? 23% of 80% of. Ow, ow, ow. Stop. What the hell was that? Right. And then we have to add it up. Okay. All right, guys. If you guys. Oh, I got T for time. Sorry. Sorry, I jumped the gun a little bit. All right, it's one thing. All right, so give me a quick G if you guys are good with that. Please and thanks. If you need me to re-explain or you spot any errors, give me a R. Just gonna check my eye real quick in the mirror. One minute. Reasonably well. Okay. Okay, so we close to the top of the hour. Right. So I want to round off Cavalcade by also doing the distributions for expenses. All right, so some expenses are expected to vary with sales in each month as follows. So cost of goods sold is 60% of sales. Bad debts is 2% of sales. Variable selling expenses, variable admin. All right. Now, basically, what we're going to be doing here is showing how much money is being spent on each of these things, right? Now, 75% of variable expenses will be paid for in the month in which they were incurred, and the balance the following month. Right? The fixed expenses will be for in the month in which they are incurred. These expenses for each month are as follows: selling, admin, right? Depreciation, if you didn't know, is a non-cash expense. There's no payment in respect of depreciation. Wages and salaries, general expenses. The company proposes to make an additional investment in equipment of that in March to handle something else. Okay, so what I want to do, that's the whole thing there. All right, so I know what I'll do. Put that on top, put that below, take off that, went about that. A little more, actually. Okay. Right, so some expenses are expected to vary with sales, right? So we did the cost of sales already. So what we do now is the disbursements for expenses. Right, so I'm just going to kind of walk you through this one, and next week we'll do a little more practice, right? So You know me, I like to put my sales first because I'm going to be pulling from that to feed the rest of the schedule. Just confirm. 140, 280, 325. 140, 280, 325. Cool. Okay, now, items that I'm paying are as follows, right? I have the variable selling expenses, the variable admin expenses, right? And I'm paying, it says here, sorry, 75% of the variable expense we paid for in the month in which they were incurred and the balance in the following month. So the variable expenses that are being paid are the selling expenses and the admin, right? So we're not counting the cost of goods sold because, again, that was used to do the purchases budget and the cash disbursements for purchases, right? That's not part of this, right? Right? The last line here could be included, but we're doing just the non. We're doing all the other expenses besides that, right? Hold on. Okay, cool. All right. So, okay. So the variable expenses. So I'm not going to separate them, right? It's 9%, right? For current month, 75%, 9%. Right. So equal to 0.75 by 0.09 by this. All right, 9450. Variable expenses previous month. So that'd be 25% of 9% of sales. Right, now, there's none in January, but you could do that for February and for March, because in February you'll be collecting 25% of the 9% of this, and in March 25% of 9% of that. We have that. We have that. Right, and then we have the fixed ones. So you have selling, administration, and salaries, general expenses, and then you have this this one-off additional investment business, right? That's only in March. All right. So in January, it'll be 25,000. Minus 18,550. Wages and salaries 5,000. General expenses 6,500. Right. So none for him. Okay. So this is actually what I want you to do, right? I want you to finish off this. Actually, no. You know what? It only have 3 minutes left. I wonder if you guys have enough time to do that. All right. In any case, this will just feed across like that, right? Oh. Right, so these don't change. As I said, they're fixed expenses, right? Right, so that's 75% of 9% of that, 75%, 9%, right? Cool. And then this would be 25%. This is total disbursements. I'll have to send pics of the question and the answer separately, clearly. Boom. Guys, okay. Right. So we got a handle on the disbursements and collection schedules today. We just got a little bit of a brief intro to the expense disbursements for expenses. Right now, you could include the purchases disbursements there. To be honest, yeah, there's total expenses, but that'll come into play in the cash budget, right? All right. So guys, that's about it for today, right? So I did manage to cover everything I wanted to cover, although it was a little bit faster than I wanted to, but I think we're okay. Right? They all could let me know if you think differently. Right. Now, again, next week is the 5th. I understand that my stepson has his walkathon, which is 7 in the morning, and it's his last year in primary school. So he probably wants to go, and my wife too. So I'm not saying that we will not have class. The last time I was able to make it back in time for class. Maybe a little late, but we'll see. Right? I will see how best I could negotiate to get out of that, but I can't promise that right now. Anyhow, but that's about it for today. If you guys have any questions and I get to ask, please feel free to message me. Other than that, have a good weekend, and I'll see you all next week. Bye. Bye bye. Uh-huh. Bye. TikTok.